surviving 10 years of living with cancer. And I invite all of those people in that landmark to join me in ringing the bell. You have to get up. You have two choices. You can lie down and give up, or you get up. And if you get up, we're going to fight. Good morning. Welcome, everyone, to the Jack Osler of Hope podcast. Our guest today is Andrew McVarish. He is a estate planning specialist. This is on the insurance side with CIBC. And I have worked extensively with Andrew over the years, and we'll get into particulars. But first, I just want to remind everybody that the content of this podcast is for information purposes only and is not intended for financial, tax, or legal advice. The views and opinions expressed are those of the hosts and the guests, are based on general information that may not be applicable to your specific situation. Always consult with a qualified financial advisor, tax professional, or attorney before making any decisions related to your retirement and planning, taxes, or legal matters. The hosts and producers of the podcast do not accept any responsibility for actions taken based on information provided. Andrew, we go back approximately 10 years. And the reason for that is, 10 years ago was when I got the news that I had cancer. And boy, that, once you get over the shock, you've started to dealing with reality and, what exactly insurance do I have? And boy, that was quite an experience for me because I actually have three different insurance providers. I have one through the Institute of Chartered Accountants. I have one with Manulife, and then another with another broker with, used to be called Transamerica. And I don't
Ivari now. It's Ivari now, after they were taken over or changed their name.
Right. So one of the issues that I had was the communication was not always the best. We didn't get sort of annual renewals, and so that was one of the issues. The other thing is, for example, on my term insurance, I don't know if we got noticed, but you were able to assist in understanding A, what I had, and B, what options we had available. And that was really important to me because there were decisions that had to be made, and I wasn't qualified to do them. I'm a financial professional, but my insurance knowledge is extremely limited, as most people are not in the insurance business are. And so you were invaluable in helping me understand what my options were. And we were able to sort of reorganize, I think, on a couple policies as to, how to deal with these things going forward. And so this is, having an insurance broker is very important on your journey. You have responsibilities to your family, you buy insurance, but that's not where it stops. I mean, there's so many issues that have to be addressed, and how much, what type. And Andrew, you're faced with these questions on a regular basis. So I'm going to let you take it from here. Like, what are you addressing when people come into your office and say, look, I've got a health issue. Where do I start here? I do have some insurance, but what's available to me? What can I do with what I have? How do I organize all of this so that I'm not running all over the place, nor will my wife, my partner, have to deal with this in the future.
Thanks, Jack. So, in a nutshell, our team, we look at insurance-based solutions for those in all stages of their wealth building journey. So, with insurance, it's better to have it when you don't need it, because as you say, if let's say there's a change in health, it may preclude you from being able to qualify for something in the future. So luckily, in your position, you'd already looked at some of these coverages and had some of this planning in place. And where it really starts for most clients is with income protection and with term insurance. So when you're working, earning an income and building up your assets while paying down debts, income protection insurance being term insurance, disability, critical illness, those are really the necessary evils and the coverages that you want to have in place while you're working.
Yeah.
And they provide those protections.
Yeah, that income insurance was something that really helped me. I had a policy that covered that. It wasn't, I mean, you put things in place, but you don't always understand what it is until you need it. And so the issue for me was basically related to the fact that, after I had this episode with the immunotherapy, I basically was not in a position to continue working. I mean, I was out in the hospital for 6 months. You lose that income, and then the question becomes, and as I've described in this journey, as I went through other events, it got to the point that the effect of the medication, the drugs, the side effects in my body got to the point that I couldn't work, and then having protection meant something very important to my family for a number of years. So can you describe a little bit about sort of the income protection options as well, in terms of what's out available in the market and how they work?
Yeah, absolutely. So term insurance, as the name suggests, it's a type of insurance that will protect your life for a period of time. So typically 10 years, 20 years are the common durations in Canada. And what that policy will provide to your family is a guaranteed death benefit, a guaranteed premium for that duration of time. Once the policy is put in place, ideally you're not having to claim on that. And once the term expires or comes up for renewal, then the premium typically increases substantially in price. So you can either reapply medically for a new policy to bring down your premium, or cancel it if that coverage is no longer required. So that's the most common type of life insurance protection in Canada. And then disability insurance is the next key one for those who are working. That type of policy will come in and pay a monthly tax-free benefit if you're unable to work and do the regular duties of your occupation. So that'll help supplement that lost income if, let's say, you have to take some time off for some medical treatments, or if you're unable to work, whether it's a physical disability or a mental disability. Because right now in Canada, I think the stats are showing that the majority of disability claims are for those with mental disabilities that make them unable to work, whether it's burnout or stress leave, et cetera.
Right. And I can understand that as well. Absolutely. So knowing that I had medical coverage or it was some relief, I mean, certainly that helped us. I think there was a limit as to the extent or the coverage. In my case, it was a couple of years. Is that sort of standard?
For the disability policy, there's a few different definitions within. So the amount of coverage that you're able to have, it's income based. So typically it's, let's say, 60 to 65% of your income is what they will provide you as a maximum benefit amount. And then typically after a waiting period or an elimination period of, let's say, a month to 3 months, they'll pay you that tax-free benefit until age 65, or some policies have a 5 or 10 year payout period.
Right. So there are a variety of choices that people can look for.
Exactly.
The other thing I found interesting was, and I've had this discussion with my kids, and in terms of insurance, and that's, you buy insurance, and I think a lot of people, the default is go to term insurance, and the term insurance policies typically will cover you to, at a very low expense up to about age 60, right? And then all of a sudden, at 60, the thought is, well, I'm getting close to retirement. I don't need this any longer. So I'm not going to pay this expense, because as you're getting older, they're concerned about your the likelihood that you will have medical issues if you don't already, and that there is going to be a fair amount of expense that you're going to have to dish out. And there's uncertainty as to time period. How long are you going to live? So for, I think, many people, they go, I'm healthy at 60. I don't need my insurance. I've paid for it already, and I don't need it going forward. And yet here I am. In my case, at 62, I discover I've got cancer. And of course, my longevity is affected. I had my insurance in place, but I mean, had I dropped it at age 60, my insurance is gone. Now, the next challenge is how long can I afford to pay for this insurance? Because the insurance goes up in price. However, instead of looking at insurance just as a cost, there was the other side of this, Andrew, that we looked at the insurance as an asset. So how long is my potential longevity? What is the payout going to be? But also that I had potentially an asset here that made funding sort of an interesting investment decision.
Exactly. So with term insurance, and you said the key word there, you get to the point where you no longer need it. And that's when you've paid down your debts, when, let's say, kids are out of the house, you've built up your assets to the point where you can safely retire and live off of the savings that you've built up for the rest of your lifetime. Now you get to the point where you may no longer need insurance, but you may still want it because of the tax efficiencies it provides, especially if, let's say, there's been a health change. If you have a term insurance policy in place, what the insurance company will allow you to do is convert that policy from term to permanent up to the face amount of the policy that you have in place without any medical evidence. So that's a large benefit to having that type of income protection in place to start. But once you get to the point where you can self-insure effectively, then it becomes an interesting tax-efficient alternative investment option, because any of the growth that occurs within a permanent policy in Canada, it's 100% tax-free. And then when that policy is paid out, it's also paid out to the next generation tax-free and probate-free if you've got them named on the policy as the beneficiaries. So that, for a lot of our clients, that becomes a strategic, tax-efficient alternative investment once you move beyond the point of needing the term insurance.
So I think the important thing to understand here is don't throw, you've made this investment for conceivably 30, 40 years in your insurance, and you get to the age of 60. I mean, the reality is life expectancy for males, I believe, is 78. For ladies, for the women, it's 82. And anything can happen during the course of that period. And of course, you can't outlive that period of time. Many do. And so that makes for an interesting decision to have to make, depending on your health. In my case, it was probably an easier decision, I had a need, and so therefore, funding this made sense to me because I wanted to retain the insurance. And yes, there was additional costs, but the net effect or net result of and based on my life expectancy, which I've outlived, I don't know, well, we'll discuss the benefits of living longer or not. It's expensive to live longer.
I'd say it's mostly a benefit, Jack.
It's mostly, well, here's the good news. I get to hang out with my grandchildren. That's the biggest benefit. And that's worth everything. I get to hang out with my family and my friends. And so that's really what it's all about. So don't look at throwing away your insurance and saying, okay, this is done at the age of 60, because quite frankly, that's probably when you need it the most.
And absolutely. And there's a few different ways that you can structure that permanent insurance policy once you switch from term to permanent, or if, let's say, you just look at a permanent policy from the get-go. So there's two main types of permanent insurance, the first being universal life and the second being whole life. So there's some differences between the two, the main being the way that the premium is either invested by the insurance company or if the premium is just going all towards the cost of the insurance. So
right.
That's a lot of what our team does, is we look at optimizing funding into the policy and duration the policy will be funded to either line up with client cash flow or to, as tax efficiently as possible, allocate assets towards the policy that would otherwise be in a, let's say, a taxable non-registered investment account. So that's where we can come in and provide our recommendations to ensure that the policy we're putting in place is going to meet the client need. And for a lot of clients, that's also looking at non-registered assets, but also corporate assets, because in Canada, life insurance has an additional benefit when it's owned and funded by a corporation. For those that have, let's say, retained earnings within a corporation, allocating those otherwise trapped assets towards an insurance policy has an additional benefit because you get a CDA capital dividend account credit provided to the corporation when the policy death benefit is paid out. So it's an added layer of tax savings that would otherwise not be applicable if the policy was owned and funded personally.
So what I found, and I don't know if I'm unusual or different than the average person you see, but over the years, I think my first insurance policy was with the company I was working with, life insurance policy, and then subsequently got transferred to a personal policy. Then I bought something through the Institute because I thought that was sort of group insurance and it'd be less expensive. And then I bought a different policy, it was term to 100. So, but I had 3 different policies, and the communication with the agents had disappeared after, I bought the insurance, and then, when I had this medical episode, it's like, oh God, I better start pulling this together. And what do I have? And who do I speak to? And I think that's when I really sort of figured out that it really needed a professional to work with and to pull this together. And that's the one thing that I didn't understand, that you could transfer policies from other institutions that I have been with so that it could be under one management. In our case, you were managing it for us in terms of all 3 policies, as opposed to my having to go to 3 different individuals, none of which were dedicated to understanding my particular needs or my family needs. So you and your team made this so much easier for us, and able to pull these resources together, combined with the fact that now we're talking to one person who understands the total picture. And as we had questions over the years, or as different benchmarks came up in terms of renewal, Andrew, which avenue do we pursue? What is the best course for me? There were a number of, as I recall, at the age of 70, there were a number of choices to be made in terms of funding, options, and so on. And so, again, invaluable to have, Andrew as a resource to guide me through this. And here's the choices I can make. Here's the cost, and help me understand this, to pull this together, and also to have my family involved with this, and most specifically Shauna, so that she had comfort in understanding where this was. And I'll put this in context of a recent experience, and won't name names, but I was organizing something for Carly, it's my daughter, and with a different institution, forgive me, Andrew. And I said to her, I haven't seen any communication on this policy, have you? And she says, no. I said, well, we put this together 2 or 3 years ago. Nothing? You don't have it? I don't have anything. Do you have anything? No. So now I start going back and going back to the organization that we booked it through, and we found it. And we had to start looking for information as to what had been organized and the policy, and to make sure that it existed. I mean, it was like we're scratching our noodle. Did we actually put the policy in place? We didn't know who had funded it. It turned out that I was funding her insurance. I guess that's good for her. But I wanted to, put things in order for, you have to have a trail. You have to have somebody who knows where this is. And so I think having someone like Andrew is invaluable for us, because it's a really important resource, because there are decisions to be made. And, it doesn't stop when, as I said, as you get older, I think you have choices. And I think a lot of people don't look at it that as like, okay, I'm paid my insurance, I don't need it any longer. I'm only going to need it if I have a health issue. Well, I hate to tell you, the health issues are more likely going to occur as you get older, at least in my case. And I think that's probably the case for most people is, as you age, health issues do appear, and all of a sudden that issue in terms of insurance becomes much more important. The important thing is for people to understand the value of your services. That, I always encourage people to seek professionals specialists in their field, people that you're comfortable with. This is not a do-it-yourself sort of thing. Don't, you can buy insurance just about everywhere. All the banks will sell them to you, but it's that personal service that you need. Somebody who can understand your personal needs and understanding policies, and someone like Andrew and his team have been invaluable to me and my family. So firstly, Andrew, we thank you for all the services that you provided over the years, but I would encourage those people who have health issues, review your policies. If you don't already have, a insurance specialist, seek one out, understand your options. There are many conversion features that are built into insurance policies, triggered sometimes by age, but, there may be other possibilities that are available for you. Do your homework. Andrew, am I correct in saying there's no fees for your services? It's inherently built into the policies themselves. And if someone wants to talk to you, there's no fees related to that. You're open to having a phone call.
Absolutely.
A discussion. So there's a door open for you people. Take advantage of it. The people like Andrew are invaluable in terms of organizing your financial affairs. You have a responsibility. Well, I truly believe you're responsible to your family. You've gone so far in spending a lot of money in terms of insuring for quite a number of years, probably. Just to throw that away would be a waste of a resource. This could be an invaluable asset down the road. So do your homework. Speak to an insurance specialist. The door is open for you. They'll all speak to you. They're not going to charge you money. They're not going to bite. You bite Andrew? I don't think so. Andrew's a really nice guy.
Not yet.
The whole family likes you. So encourage people to please seek professional advice on this issue. This is really important. There's a lot of dollars at stake. This is an issue that can really help your family when you're gone, and an important piece of your financial, picture. Don't neglect it. Do your homework. As I say with everything else, do your homework. And in this case, it doesn't cost. It's a phone call, right, Andrew?
Exactly. And to your previous point, Jack, about how you may have these coverages between different insurance companies, between different brokers. Although CIBC, we have our own insurance product, we are a brokerage. So we can represent Canada Life, Manulife, Sun Life, RBC, and that's a benefit of engaging our service is we're able to review these policies that may be held elsewhere, bring them over to our agency at CIBC at no cost, and provide that advice. So something as simply as you're currently paying a policy monthly, you could switch that to annual and save 8%. You may want to update your beneficiaries. If it's currently listed as your estate, you're not going to get that probate bypass if you would otherwise have the beneficiary's name directly on the policy. So something as simple as a phone call to make that quick recommendation and provide some value for both your family and for your estate or your beneficiaries. It's worthwhile to have that conversation, even if it's just reviewing and making no changes, just knowing that what you've got is currently meeting your current family needs.
Which always gives you peace of mind. So,
exactly.
Once again, Andrew, personally, thank you for today. Thank you for all the assistance you've provided throughout the years. Andrew's been an invaluable resource for our family over the last 10 years in helping us organize our financial affairs and updating them. And we're in a good position where quite frankly, I did not have the ability to do this on my own. I was really, this is not my skill set. And, when we originally had this issue, we picked up the phone, we connected, and you and Aram, one of your partners, came to our home, sat down with us, went through all of what we had, tried to make sense of it for us. And we started that relationship, and it's really been invaluable for us. And I thank you for all of that as well. So I encourage all of you to reach out to an insurance agent to assist you in understanding your coverage and give you comfort that you've done the right thing for your family. I thank you very much, Andrew, for today. And for those of you who are listening, kindly, as you look at the bottom of your screen, you'll see, places where you can link to Kidney Cancer Canada for charitable donations, as well as Princess Margaret Foundation. Both organizations fund research. They're going to help your, I don't consider this as something that's going to help me personally, but the research will help other people in the future. And it could be family and friends, and you're doing the right thing. So, be as generous as you can. We thank you for your support. And Andrew, thank you for today. Everybody, have a good day.
Sorry.
And be well. Bye.
Take care.